Have you been asking yourself if SPMO is still a buy after its recent run up? Today, we're going to be looking at this ETF as well as others, figure out what is the right fit for your portfolio. Many have been turned off by the fact that the S&P 500 has been highly dependent on a handful of tech companies for some time now because these are the names with that largest market cap. That's why today we're doing something different. Instead of comparing SPMO to a fund that tracks the S&P 500, we're looking at a handful of other Invesco S&P 500 ETFs, different tilts that give you exposure to this index. We'll be taking a look at what each of these does, how they compare, and will fit into your investing style. Not financial advice. I am not a financial advisor. Just the fact, info, and resources you can use to make your own decision. Being market cap weighted, like VOO, for example, which tracks the S&P 500, has worked well recently, but it also comes with higher risk because those few names, when they stumble, you're going to feel it when it comes to your portfolio. These Invesco ETFs, they use simple rules, giving you exposure to the S&P 500 in different directions. SPMO is focused on 100 stocks in the S&P 500 that have been going up the strongest. It has high energy growth as its focus, and because of that, it can be volatile. RSP is our equal weighted ETF. It gives every stock the same exact small weighting throughout the fund. This fixes the top-heavy problem of those giant companies dominating an ETF. We have QVMT, and this is a multi-factor ETF, a concentrated mix that looks for stocks showing good quality and value as well as momentum. SPHQ is strictly focused on quality. Companies with the strongest balance sheet, good profits, low debt, and then we have ticker symbol SPLV, our low volatility ETF. It also focuses on about 100 stocks that move the least. It's built for smooth rides during market drops. These ETFs, exchange traded funds, rebalance for you periodically, selling the stocks that no longer fit the rules and buying ones that do, doing the work for you. This is why ETFs are always a good choice for beginners. Each of these is following clear rules and keeping you on track to have exposure to the winners according to those set rules. Take a look at the expense ratios when it comes to these 5 funds. We have SPMO and QVMT at 0.13%, SPHQ at 0.15%, and then RSP and SPLV with the highest expense ratios at 0.20% and 0.25%, all with about 100 holdings except for RSP. If you're enjoying this breakdown, make sure you subscribe. Now, let's take a look at the holdings of these funds. Starting with SPMO, our momentum ETF. Its top holdings make up 50% of the fund's positions in big names like Micron, Nvidia, Broadcom, AMD, as well as Google. It is tech heavy right now, so you'll have to be okay with that current concentration mix, but this one is always going to be having you with exposure to what's currently moving the fastest. Then we have RSP with everything spread evenly, no one particular company dominating. QVMT, its rules has it concentrated around quality, value, as well as momentum. So in the top 10 of this fund, there are several names that you'll be familiar with, like Apple and Western Digital. Then we have SPHQ, a quality ETF. It's most heavily weighted into tech, industrials, and staples, followed by financials. We have names like Apple, MasterCard, as well as Costco here in the top 10. And then our low volatility ETF, SPLV, will have you on track for that stability with companies like Lowe's, Johnson & Johnson, as well as Realty Income. Now let's take a look at the performance. And all of these funds have a higher expense ratio than you will be paying for exposure to a fund like a VOO that just tracks the S&P 500. So ask yourself the question as to whether the extra cost is worth it for the performance that these funds are giving us. All of these funds have been around for over 10 years, so we have a pretty good length of history to look back on. The oldest fund out of these 5 is RSP, which has been around since 2003, and the newest funds are SPMO and QVMT, which were created back in 2015. Looking at the average rate of return on these funds, SPMO is winning when it comes to every time range that we're seeing here. Year to date, 24.38%. Over the last year, up 30.29%. The second strongest performer is QVMT, and over the last year, 30.12%. Here's a look, the performance of all of these funds over the last 3 years, 5 years, and 10 years, showing that SPMO is the leader across the board. But we're also getting solid returns from QVMT as well as SPHQ, and the lowest returns from RSP and SPLV. And just for comparison, I'm throwing in VOO so that you can see how it measures up against all 5 of these funds. It's coming in second behind SPMO, but ahead of all of the other funds that we took a look at today. So yes, SPMO is thing when it comes to performance, but it also comes with higher volatility. More ups and downs. It's going to shine in a bull market when it has that right mix of companies with strong momentum. Depending on your risk tolerance and your style of investing, you may want some of your investment in an equal weighted or low volatility fund for stability during those rough periods. When it comes to my portfolio, I already have built out my positions for that stability. I have investments into FXAIX as well as VOO and VTI in my taxable accounts. So now I'm definitely comfortable with incorporating SPMO for additional growth. And when it comes to my portfolio, the other funds that we looked at today aren't needed in my current plan, but they may fit into yours. When it comes to investing, I'm still in the building stage. As they say, it's a marathon, not a sprint. I'm still building, dollar cost averaging. I've been steadily adding 0.1 share when it comes to my SPMO investment and going heavier when we have more significant pullbacks. I got started investing into SPMO in late 2025. It's rebalanced twice since I started investing into it, and I love the exposure that it's giving me. The companies behind the stocks in this ETF keep growing their earnings, and then the momentum follows. I know it's not going to go straight up forever, but I'll be holding, ready for those periods when it rebalances, holding through the bear market and ready for the bull markets to see my portfolio thriving. When it comes to my investment, I'm currently up 24.35% with an average cost of $119, a portfolio value approaching $30,000, and I'm currently up $5,776. I'm doing this one over in one of my portfolios at Fidelity, where you can invest as little as $1 at a time. I have that flexibility in all of my portfolios. Low amounts, $1 or $5 at a minimum. So I'm never held back from getting started investing, adding the quality blue chip companies and ETFs that I want to have exposure to when it comes to my portfolio. My foundation is set, and for right now, SPMO is one of those growth investments that I'm focused on. But there are thousands of ETFs and mutual funds out there, all funds from Invesco, the same broker with different twists on exposure to the S&P 500. Sometimes I have to have patience when it comes to my portfolio, especially when I'm just getting started. But as time passes, by incorporating the right investments into your portfolio, you'll become deeper and deeper into profit. And when the market is red like it is today, you'll be seeing it when it comes to your daily gain or loss, which for me right now is negative $233. But my total gain is so much more. So make sure you're doing your research, building the portfolio that fits your comfort level, your time horizon, your goals. It's not a one-size-fits-all thing. Understand how these funds work, the volatility, how it measures up to an index like the S&P or NASDAQ. Set a standard for yourself. So let me know in the comments, do you have SPMO in your portfolio? Are you sticking with just a basic S&P 500 ETF or mutual funds? Or have you incorporated any of the other funds that we took a look at, giving a different angle, concentrated, quality, equal weighted? Share those comments as well as any questions that you may have. Make sure to like, subscribe, hype, hit that notification bell. Be on the lookout for more videos and live streams. And make sure to invest responsibly. Have patience and don't let the opportunity of investing pass you by. Thanks for watching. Okay, bye.